Average cost method. Inventory costing method based on the average cost of inventory during that period. Average cost is determined by dividing the cost of goods available by the number of units available. Weighted average method. Consignment. An inventory arrangement where the seller sells inventory that belongs to another party. The seller does not include consigned merchandise on hand in its balance sheet because the seller does not own this inventory. Conservatism. The accounting concept by which the least favorable figures are presented in the financial statements. Consistency principle. A business must use the same accounting methods and procedures from period to period. Cost of goods sold. Cost of the inventory the business has sold to customers. Cost of goods sold model. Formula that brings together all the inventory data for the entire accounting period, beginning. Inventory purchases equals goods available, then, goods available, ending inventory equals cost of goods. Debit memorandum. A document issued to the seller when an item of inventory that is unwanted or damaged is returned. This document authorizes a reduction to accounts payable for the amount of the goods returned. Disclosure principle. A business's financial statements must report enough information for outsiders to make knowledgeable decisions about the business. The company should report relevant, reliable, and comparable information about its economic affairs. First in, first out cost. Inventory costing method by which the first costs into inventory or the first costs out to cost of goods sold. Ending inventory is based on the costs of the most recent purchases. FOB. Gross margin. Another name for gross profit, sales revenue minus cost of goods sold. Gross margin method. A way to estimate inventory based on rearrangement of the cost of goods sold model. Beginning. Inventory net purchases equals goods available. Cost of goods sold equals ending inventory. Gross margin percentage. Another name for the gross profit percentage. Gross profit divided by net sales revenue. Gross profit. Sales revenue minus cost of goods sold. Gross profit method. A way to estimate inventory based on a rearrangement of the cost of goods sold model. Beginning. Inventory net purchases equals goods available. Cost of goods sold equals ending inventory. Gross profit percentage. Gross profit divided by net sales revenue. Inventory. The merchandise that a company sells to customers. Inventory turnover. Ratio of cost goods sold to average inventory indicates how rapidly inventory is sold. Last in, first out cost. Inventory costing method, by which the last costs into inventory are the first costs out to cost of goods sold. This method leaves the oldest costs, those of beginning inventory, and the earliest purchases of the period in ending inventory. Lower of cost or market rule requires that an asset be reported in the financial statements at whichever is lower, its historical cost or its market value. Periodic inventory system. An inventory system in which the business does not keep a continuous record of the inventory on hand. Instead, at the end of the period, the business makes a physical count of the inventory on hand and applies the appropriate unit costs to determine the cost of the ending inventory. Perpetual inventory system. An inventory system in which the business keeps a continuous record for each inventory item to show the inventory on hand at all times. Purchase allowance. A decrease in the cost of purchases because the seller has granted the buyer a subtraction from the amount owed. Purchase discount. A decrease in the cost of purchases earned by making an early payment to the vendor. Purchase return. A decrease in the cost of purchases because the buyer returned the goods to the seller. Specific unit cost method. Inventory cost method based on the specific cost of particular units of inventory. Weighted average method. Inventory costing method based on the average cost of inventory during the period. Average cost is determined by dividing the cost of goods available by the number of units available.